So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. I'm your host, Brett Swarts. Each episode, I am joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I am excited about our next guest. He brings a wealth of knowledge and experience of over 25 years in the investment world as a financial advisor and so much more. He spent 15 years with PIMCO and was closely with notable investors such as Bill Gross, Paul McCauley, and Mohammed El Iran. His career at PIMCO spanned several assignments, most recently serving as the Executive Vice President of Account Management, covering a range of family offices and institutional clients, including Abu Dhabi Investment Authority, Intel, United Auto Workers, 3M Corporation, and others. Now he is the founder of Anfield Capital. That's actually in Southern California, and he's reignited a brand new firm that I think opened up now just in the last year or two. And he's going to tell us a little bit more about that, his vision for the company, and how he can help you create and preserve more wealth. Please welcome to the show with me, David Young. Hey, David, how are you?
Great, doing great, Brett. Thank you, and thanks to everyone listening, watching.
Excellent, yes. And by the way, you can find David Young and his team at Anfield Capital. I believe it's LLC.com. Is that correct? Or Anfield
Correct.
Capital? Yeah.
That's right. Exactly. Anfield Capital LLC.com.
Excellent. So David, would you give us a little bit more about your story and your current focus?
Sure, happy to. So I'm sort of one of those investment geeks. I must admit, proud of it. Spent effectively my entire career in the investment management industry with, some cases small firms, in some cases large firms, Smith, Barney, Harris, and Upham. Back in the day, that was the mid 80s, so I'm dating myself. And then, for quite some stretch at PIMCO, Pacific Investment Management Company, which is a fixed income. It's really an asset management giant, best known for their fixed income or debt investing work. A few other firms along the way, and started Anfield Capital. So that's myself, sort of, MBA from the University of California at Irvine. Did rejoin the finance faculty there, probably in, must have been 2008-9. I was after leaving PIMCO. One of the reasons why I left PIMCO was to sort of, reinvigorate the career, redirect, I should say. We can talk more about that. And then around about that time, decided to start Anfield Capital Management. So it's been exciting stuff. It was really all about rediscovering my passion for the science and art of managing money. I'm a trained economist. We found the best or most interesting application to that, that dismal science, as some call it, in the field of investment management. And that's what we do. I'm native of Liverpool, England, hence the Anfield Capital being the name of the firm. Liverpool is located in an area or near a street called Anfield. And I've lived in a number of places around the world, in the US and Europe in particular. Live here in Newport Beach with my wife, Sandy, and just enjoying managing money and helping clients.
That's a beautiful background and a cool story. And we'll dive into a little bit more about those particulars in a minute. I want to take one step back though and help the audience get to know you a little bit more. I believe we've all been given certain gifts in this life, and I want you to kind of go back maybe to it could be the university days, it could be the high school days, it could be younger, right? And I believe we've been given certain gifts, and these gifts are given to us to be able to be a blessing and help for others. So maybe what were those one or two gifts, Dave, that you believe you were given, and how does that help how you bless others today?
Ooh, gifts are, yeah, that's a tall order to think about that. I don't tend to think of myself as gifted. Humble, maybe that's a gift. No, I think, so I was a late bloomer in life, and for all you late bloomers out there, don't worry. It's okay. Sometimes better to wait. And yeah, much to the concern and dismay of my parents, more than one time, I'm quite sure it was like, does he talk? Is he okay? Super quiet, which you would not believe now. Everybody's like, no, I don't believe that, So that's okay. Things change in life. But I think out of that, spending a lot of time inside my head, being a bit of a late bloomer, I spent a lot of time in my youth watching, observing, listening, beautiful thing, just taking it in. I didn't feel the need to necessarily talk a lot or participate, necessarily. And so I think that kind of maybe keen observational skills about people, about things, about markets, about portfolios, about numbers, and being able to try and figure out separate what really matters from things that maybe don't matter. And in the modern world, there's so much going on. That ability to just pause and focus, and I think is a gift. What else would I comment on? Yeah, I think if I may be allowed a second gift, is a can-do attitude. I've always said, if you want something done, ask the busiest person you know. And I'm typically one of the busiest person that many people know. And so the can-do attitude helps me be positive with others and say, let's not get hung up on the problems, the challenges, the impediments. Let's see if we can find a way past no. Let's see if we can find a yes. Let's see if we can find a way to make it work. Got to be careful with that one, because sometimes the answer really is no. And in my journey to become a better person, I'm still trying to find the blend. Yes, all the time is actually not the right answer, either in business or in life. It's that, careful application of the occasional no that puts things in balance. Maybe those two things.
Very well said, and so much wisdom there. One of the questions that come to mind here is the keen observational skills. So how have you improved or built upon that strength over the years?
How have I built upon it? Yeah, I think I'm still learning less is more. Still learning, keep it simple. I'll leave the stupid part off. A little bit mean there. Learning how then what you have to do is learn how to balance that with communication. You can't just be taking in. You've got to find a way to now say, okay, let me share, right? It's that sharing part, right? So it's not selfish anymore. The observations and share them in a way that other people can understand them. Not that I'm any smarter or it's not about that, right? It's about bringing them into that perspective you gain through that observation, and then saying, okay, now what do we do with this information, right? How do we get a better result for you and your investment portfolio? How do we get a better tax mitigation strategy? How do we just have a more interesting conversation if we're just sitting around talking?
Mm-hmm. Very well said, and very simple, right? Taking down what can be complex, making it simple, and then creating an environment where you can share that, right, with one another, and then apply it. And it's almost, I think a good financial advisor or consultant comes alongside and shows and kind of guides, and then says, what do you think? And you're right, it might be some no's, it might be some yeses, but if you're not getting the no's, perhaps you're not getting to a really good yes, right? So it's important to work with the client and to work through the communication and then to apply that. Thank you so much for sharing that. So when did you become fascinated and or obsessed with helping others achieve freedom with their wealth through investments?
Well, let's see. I think there's probably a kind of a a little more righteous answer, and then I think there's frankly a little more selfish answer. At the end of the day, I'm building a company. And that means you need to have clients and assets, which is typically how the compensation works, right? We get paid a small amount of a percent to manage the money. And so, you look around and you say, where can myself and my team, because we do have a pretty good sized team, all very experienced, very professional, similar mindset to myself and Brett and others. It's how we all gravitate together. I think good people find each other. There's a way, I don't know how it works, but it works. And so the selfish part of that is seeing an opportunity to combine our skills, expertise, some of the qualities we've just discussed with a need of our clients to build a business. That would be that part. I think the other part is identifying that done right, wealth transfer, unlocking the value embedded in assets through the right kind of transaction doesn't have to be complicated. That's the observational, bring it all in, boil it all down, turn it into a solution, right? Great, that's all great. What do I do with this? Number one, I think that and the way the assets are managed inside these trusts once they're struck, again, it's not magic. It doesn't have to be super complicated. It doesn't have to be super expensive. It doesn't have to be accessible. Also, probably third point, only to very large, like the really rich people. No, there's a strategy in here that can help a lot of folks. I mean, just the guy down the street or the lady on the other, across town that owns a business or a home. It works for them too because it's accessible. So I think that's maybe kind of the application on the helping clients part.
Excellent. So what's the biggest secret to unlocking value in the investments? Walk us through that, where the aha moments that you're helping clients to have, either, and it maybe not just be in the investments, but it could be their portfolio, it could be their assets. And walk us through, if perhaps we're meeting for the first time, and what might be a question or two that you might ask me to try to open up the possibility of unlocking that value there.
And so let me ask a clarifying question, Brett, so I make sure I answer it properly. Do you mean about the transaction to, let's just say they're selling a piece of real estate and then putting that in a trust, and now there's money, cash in there that we can do something with? Or do you mean about how that money might actually be managed?
The latter, because we've talked a lot about the former on the previous one, so this will be more of the latter.
Got it. Okay, so I wanted to be clear. Good, because I know more about the latter than I did about the former, so I was a little nervous there for a minute. When we stop, maybe as with many things in life, pursuing the payoff, right? The big returns. I need 10, 12, 15%. I need something very complicated. I need a custom strategy because, my world is complicated. The entire world is complicated. When we stop pursuing those, which frankly are a little bit based in ego, if I may say, we see that. We all have it. I have it. Then we start to focus on what really matters, which is managing the risk part of the conversation. Boring, but it's what really matters. So I've learned two things in my career managing money. Number one, focusing on risk allows you to take advantage of naturally occurring return opportunities. So you're not chasing the return opportunity. You're taking a sensible amount of risk and you're allowing the market to compensate you in its own natural way. And it's lumpy and disruptive and sometimes a little nerve wracking, but it's a better way. So we focus on determining how much risk we need to take and how much risk the client and the transaction can comfortably sort of coexist with, and then building a portfolio that will optimize the return we hope to get. Never know. Hope. It's from my compliance officer. Hope to get based on that sensible amount of risk. So it's a risk-based approach, not a chasing return approach. Number one. Number two, the single most deterministic aspect of a good investment management, a good investment strategy, It is not forecasting interest rates or the stock market or technology stocks or any of that stuff. It's really, really, really simple. It's also, I think, one of the most scarce attributes in the investment management world, and I know many of my colleagues very, very well. It's patience. The patience born of conviction. When you take a high conviction position and you take it in your personal, sorry, we've got these fires here in Southern California, which is a separate discussion. And so there's just, the air quality is low. You take a high conviction position in anything, in your life, in your relationships, in your business, in your workout, your diet, in your faith. You take a high conviction position, patience comes easy. But it's combining those two in the right measure. So patience is critical in helping our clients understand you took the right amount of risk, return will come your way, but we need to be patient.
Yeah, so
maybe you're looking for things like, price equity ratio or earnings or things like that, but I really don't think that they matter over reasonably long periods of time.
Mm-hmm. Yes, well, very well said. And I think that patience is probably the most challenging virtue in today's rapid-paced, technology information-packed environment. In fact, I think a lot of wise people have said it's no longer an information age, it's an attention age. We're way past information. It's the ability to capture attention, and that, I think, is the biggest challenge to patience. So I love the way you said that, born on conviction or a high conviction foundation. In other words, let's imagine you're building your mindset for investing. If you can build it on a foundation of patience, it's going to have a solid, and conviction, right? Conviction, I guess, is maybe the better word. And then you're going to have a big, the second floor is going to be better to have patience. Is that a fair summary on that last point?
Yeah, I think if you have, we talk all the time in the investment committee about high conviction trades, high conviction, positions. And if we can't get to a threshold of high conviction, then we know that our patience will wane, right? Because maybe we didn't really have that degree of commitment. It's important in life. It's important in everything. And it's very important and very scarce in investing because we all want that quick payoff. We all want that hot second quarter number, we can go tell everybody how great we're doing. And it's oftentimes part of folly.
So the ego and pride part, the emotional part of it, the discipline part of it has so much more to do than maybe perhaps just the numbers. Is that a fair summary?
I think it's a fair summary. Look at some of the great investors of all time. My former boss, Bill Gross, Bob Miller at Legg Mason, Warren Buffett, right? If you really peel apart, even back in the day, Peter Lynch, you really peel apart what's at the crux. It really is. It sounds so trite to say it. It really is a high conviction, long-term strategy.
So how do we nurture patience and establishing high conviction mindset and discipline? What did the Bill Grosses do? You're close to him. What was Bill doing to nurture that and to practice that?
Yeah. So it does help if we have some of the basic principles of investing, and a lot of this everybody already knows, so I won't go try and explain any of it, but diversification matters because if you can get enough high conviction ideas in a portfolio or in an investment strategy or in that DST, that trust, then it makes it easier. If you have, a number of different things going on, diversification matters to help control risk and spread risk. That's the risk part that we talked about in terms of that approach. So it's structuring a portfolio properly. So the portfolio allows you to allow it to interact with the markets over time and do its thing, so to speak. It's, I think, a discipline, a lot of vigilance. If you have the ability to watch the portfolio, and Bill would come in every day and just piles and piles. It was more of a paper guy than a computer guy. Certainly a lot of time on the computer. I'm just going through manually every account, hundreds of accounts. amazing, just mind-boggling. But immersing yourself in the numbers, I think, gives you the ability to feel confident, right, and where you are, and like, I know the risks, I know what's happening, I've got a handle on it all. I'm just going to call that good old-fashioned hard work. That's some of the observational skills we talked about before. What else? And then I think, oddly enough, once you determine that something isn't working, the premise was wrong, something in the world has changed, it's not working out, and you do lose that conviction, and this is going to sound very sort of, contrary to what I said before, knowing that once you get there, you can exit that investment position that isn't working promptly and not look back. It's strangely freeing knowing, like anything, I can get out at any time. And knowing that I have the discipline to know when to exit. A buy decision is important. A hold decision, be patient, is important. But that personal commitment and discipline to exit when you have lost conviction, go with your gut, because it is an important part of it. Strangely, that's freeing and allows you to, observe the markets in the portfolio and watch them do what they do.
So well said again, and that would be maybe the second or third book you could write on all these topics. But it makes me think about what's happening right now in the real estate market, and especially the values. And we've seen some all-time highs, and a lot of high net worth individuals are just folks that are just, like you said, don't even realize the wealth, or it's kind of the middle of the road. That's still fine too. A lot of it's tied up in these real estate deals, right? And they're not diversified, and they're subject to eviction laws and the rent control laws, especially in California and different states. And it's a challenge. I think more than ever, it's important to have liquidity, diversification, and the ability to have freedom, right, from having to feel like you have to be trapped by either tenants or the landlord laws. And that's where I believe the Deferred Sales Trust is such a powerful way to not only to have a transaction, right, where you're deferring tax, but actually have a transformational exit plan to give you opportunity to have, wealth that's building a new foundation of wealth that's diversified, that's liquid. So would you just speak to a little bit about that thought and your thoughts on the Deferred Sales Trust?
Well, as I think I commented before, it's the fact that it isn't magic. It's very understandable, makes it strangely kind of magical. Simple, very well tested. Myself and my team in our business, credibility is really important. And a wise person once said, you'll only lose your credibility once, so you'll never get it back to lose it again. And so we spend a lot of time and effort studying their approach, meeting with some of the trustees, getting to know it, looking at, it's been looked at 8 ways to Sunday. And it's better than other approaches because it is simple. It doesn't try and test the boundaries. There's natural opportunities in the tax code. Keep it simple, keep it right down the middle in the bright sunlight. So there's none of that other nonsense. I think it's accessible. We talked about that a little bit before. I think these things can be done reasonably quickly. There's this kind of, dream team that's been constructed. Brett's part of it. You can talk more about that, where, I've seen these things go from start to finish in a relatively short amount of time, and freeing people up from some of the complications of the 1031 exchanges. And they got the window on the thing where they couldn't find the pro, it's so simple. It's so clean. And then once the assets get in there's a reestablishment of cost basis. And then there's this real liquidity, transparency, ability to identify the place you want to be on the risk spectrum, and ability in some ways to, to hit the restart button on that asset, because all of a sudden, all the issues surrounded with the tenants and the maintenance, if it's a piece of real estate, and changing of tax laws and changing of, accounting laws and whatever else, those are all behind you now, right? I think those are some of the PowerPoints.
Yeah, you're absolutely right. And that's the transformational part that really changed it for me as well. when I was at Marcus & Millichap helping people buy and sell real estate before the crash of '08. A lot of them had bought and sold and overpaid because of the 1031, and this was their, half or majority of their wealth was tied into these decisions they were making that were forced. And I call it the shotgun wedding. You have 45 days to get engaged and 180 days to get married. And sometimes when you're under pressure, you tend to make poor decisions, especially if you have to go into equal or greater value, which is equal or greater debt. And so the Deferred Sales Trust allows you to get out of debt, diversify.
Sorry about that.
That's okay. That's no problem. Diversify.
Home office I didn't turn off. I turned off every other phone. Sorry.
That's okay.
That can be edited out, hopefully, a little bit.
It could be, but it's also kind of cool for the show because
okay.
It happens. So, but speak to a little bit. You mentioned the staying in the sunlight, and I think this is really important because the biggest thing I think for a lot of folks who are learning about the Deferred Sales Trust for the first time, and I imagine when you learned about it for the first time too, right? There's skepticism. There's too good to be true. There's what's the IRS done? Why isn't everyone doing this, right? And why hadn't I heard about it before, right? So would you kind of walk through just kind of your journey of due diligence, right? And what that looked like so folks can kind of get that level of detail that you and Anfield Capital put in before.
I'm certainly not a tax person or an accountant, that's for sure. And so talk to folks we know. They took a look at all the various reviews. There's, obviously it's been reviewed by every 3 or 4 or 5 letter governmental agency, in a regulatory or oversight context. You can imagine the IRS being, of course, the most important one. Letters of review, no issues. And you just sort of start to put it all together. I mean, if you watch something for a reasonable amount of period of time and you ask about it or look at it from a multi-directional, many different facets, if there's something there, you'll probably find.
Yeah, very well said. And same here, right? Once you kind of, I call it riding the bike, right? The first time you rode the bike, or your advisors have never rode the bike, it's going to be a little wobbly because you've never done it. But if you can get along someone who's already been riding it and riding it for 25 years and thousands of closes and the over a dozen no change IRS audits and the large deals, and oh wow, these guys are speed riders, right? I can learn how to do that, and yeah you can. With our help, we'll help you guide that. And on your first one, you'll be getting going fast, and before you know it, you're jumping on with the speed bikers, and you're as fast as anyone else. What's maybe the biggest mistake a client has made as it pertains to capital gains tax deferral? In other words, what's that story where you're just like, oh, I wish they would have known either about the Deferred Sales Trust, what was that story that really would have made a huge difference had they known about the Deferred Sales Trust?
I think probably the obvious one, which is waiting too long, going too far down the path. There's probably a gray area, which we don't tend to be anywhere near. That gray area is when you've gone into the process of maybe there's, letters of intent or other things, or where the potential sale is simply too far progressed, right? And then it's like, no, this is not supposed to be I sold my house yesterday. Can I stick it in here real quick and get around? No. When we hear get around, okay, that's no, we're not getting around anything, right? There's a specific set of steps that have to happen in a specific order with some reasonable amount of time. And so it's just like that thing. It's just planning. It's getting out ahead of it. It's asking the right people. And if you think it's the right solution for you, start early, start often, and really be very methodical and organized about it. So yeah, it's the shame. We have one client now are managing the money, and it didn't come out of a DST transaction. They were too far down the path. They'd already committed. We can't, it's too late. And so they were so pleased with our guidance and being forthright, and they have other real estate and other things that they want to transact. And they said, well, okay, all right, well, next time we'll do it right. We understand now. We didn't know about it before. And they said, well, will you manage this money anyway, the after-tax money? I said, sure, I'll do. Yeah, absolutely, we can do that. So I think that would be one comment. I think the other comment would be, well, maybe were there two parts to the question? I want to make sure I'm answering it properly.
No, I think you answered it really well.
Gosh, what a shame.
Yeah, you answered it really well. Just that was a story of a client who was too far down, and for those who are listening, we can save a failed 1031 exchange, so that is a nice part of it. Depending on the timing of that as well. So for investment real estate owners who happen to be in the 1031, good. But everything else we've really got to do before close of escrow, not only before close of escrow, but before the buyer removes all contingencies. And that's really the key thing where the IRS looks at what's called constructive or actual receipt. Constructive means there's really nothing that's going to withhold you from taking, these funds in the next 7, 10 days, whenever it's going to close, 3 days. And had you not set up the trust prior to that point, that's the window where you can get in trouble. So you got to, we want to be early, set it up, sometimes even before even a listing goes on onto the marketplace to keep yourself, the earlier the better. And the neat part about us too is we don't charge unless you do the deal. So it's really a no cost due diligence. And it's also a no cost in case the buyer doesn't work out. So no, you shared it very well, David. Any thoughts there, or are you ready for the lightning round?
No, I think the other comment would be, although it might be getting too technical, it might be for later. Then it's just a realistic understanding of what can be done with assets that are in the trust. We see folks who are like, so here's what we're going to do. I'm going to sell my house to the trust, and then I'm going to have my son or daughter live in the house and not pay rent, and then I'm going to no again. Well, that way we can get around. No, get around. No, get around. Do it right.
Do it right. And to that point, he means 100% investments, right? So the IRS gives a study of macroeconomics. They give these tax loopholes, legal tax loopholes, not to get around, but to incentivize the economy to grow, and actually grows the economy, which grows jobs, which grows tax revenue. And so as long as it's investments, right, our business purpose, then the IRS likes the Deferred Sales Trust. But yeah, as soon as you try to take that and make it like personal property, it's the same reason you can't 1031 an investment property into a primary home, because it's primary, it's personal property. They're going to say that's not enough of an incentive. That's really just personal pleasure kind of thing. So just pay the tax. But by the way, you can cash out of the trust and pay your tax and go buy that fancy house or that fancy car. It's not prohibiting you to do that. You just have to do it in that order. Cash out, pay the tax, then do it. Don't try to use tax deferred money to do that. So those are all the things that we can guide you through and show you. With that being said, are you ready for the lightning round?
I'm ready.
All right. So knowing what you know now, David, if you can go back to your 25-year-old self, what's the one golden nugget that you would make sure that you would do?
One thing that I made sure that I would do, again, maybe somewhat more philosophical than anything, I discovered over time that people don't know what you're thinking, and they don't know what you're feeling. So if you want them to know what you're thinking or feeling, you need to tell them. And if you don't want them to know what you're thinking or feeling, you should not tell them.
Yes, that should be the book. People don't know what you're thinking or feeling. And if you don't want them to know that, then don't tell them. But if you do, then go tell them. Very simple and very well said. And that could be a good marriage seminar, I would think, too, right?
Maybe, I don't know. I think maybe my wife is whispering that in my ear when I'm asleep, and that's where I got that idea from. I don't know, but yeah, and I think just the importance of credibility. Mm-hmm. You only get it once. It takes a lifetime to earn. It takes one inadvertent, or although usually there's forgiveness there, or intentional, then not. You can ask forgiveness, mistake, and then it poof. I've seen folks ruin entire careers with the credibility building by one ill-conceived idea or overzealous action.
Very well said. I think a good quote for this: credibility is never owned; it's only rented, and the rent is due every day. And you can do that with anything. If the integrity is never owned, it's only rented, then rent is due every day. So moving to the second question, what's the one book you've recommended or gifted the most in the past year?
So this is the downside of being an investment nerd. I don't read, well, I read all the time, like constantly. So my idea of relaxation is not reading. When I do read a book, it's things like, I don't know, Monetary History of the United States by Milton Friedman. It's not a page turner. It is not. And so it's nothing that I think of. If I wouldn't do your listeners and watchers the injustice of recommending any of those books. You want to talk about music? That's my outlet. I'm struggling to learn how to play the guitar. It is not going well. I have a terrible singing voice, even in the shower, which is hard. But I will typically, I will listen to music all the time if I didn't have to work.
Beautiful. No, that's well said. I appreciate that. I should maybe have that next question. What's the one, album or artist you've recommended in the past year? Next question, though. Give me a mobile or digital resource you recommend for your business.
A mobile or digital resource for our business. Well, I think there's some readily available online information sources, not specific to Anfield Capital, but just like a resource anybody can use. Yeah. I think some of theirs, I, to this day, 30 plus years in the business, I went online to, it's called Investopedia. It's just Investopedia, like encyclopedia, investopedia.com. And I get word of the day, which is like the calendar, right? And the vocabulary building calendar. And then some other things. I have a number of different publications. Just helps people learn. I have all of my younger staff say, go to Investopedia, sign up for these 3 things. Just that drip, drip, drip. Every day I learn a new word. I know many of them, but it's good reinforcement. I think things like Yahoo Finance and other online market and economic things. Advisorperspectives.com is another good source. Lots of interesting, easy to read 1- and 2-page articles, thought pieces about either the market or about an investment strategy or about ways to defer capital gains in transactions, and accessible, easy to read. And I would encourage people to, if you have investments, you're interested in markets, there's such an interaction between markets and politics and society, even more so every day. And the world is so global. Those are 3 easy ways to just kind of stay in touch.
Beautiful. Thank you so much. Yeah, and this will be our last question. And it's centered around, after all your success and being able to help so many people, and now being where you're at now, how do you stay centered in your values? And then how do you stay encouraged to reach for new heights?
Centered in the values. And reaching for new heights. So yeah, I figured out a while back that the endless pursuit of money, like that kind of enrichment, was and it's not like I have all this money, right? I mean, we are comfortable, but just over time de-emphasizing that and realizing that health, family, friendships, they're the things that endure. Part of that is professional credibility, reputation. And so spending more time focusing on those and trying to sort of a journey of enlightenment and being a better person. And so those are sort of my missions. I have financial goals like everybody does, but it's understanding that those come in time, and there's good times and bad for us like everybody else. This is a 2020 tough time. And so I think also deriving enjoyment from mentoring and growing people around me. I think sometimes I drive my staff crazy because that's the Professor Young in me coming out. I think I mentioned before, I'm not teaching currently, but I'm in the faculty at the Moraes School of Business, University of California, Irvine. Giving back by mentoring and training and cultivating others. I think that's important to me.
That's beautiful, and I appreciate you sharing that. And for our listeners, that's going to wrap up the show here, who want to get in touch with you, David, what's the best place for them to find you? Could you remind them one more time?
Sure. The company website is ANFIELD LLC.com. That's I'm sorry, it's Anfield Capital. AnfieldCapital.com. Website wrong. You can also call the general number 949-891-0600. Susie or Natasha will answer. They're very nice. They'll track me down if I'm around. I'll chat with you. If not, I'm sure they can answer most of your questions probably better than I.
Well, thank you, David. I want to thank you for sharing so much wisdom, sharing your insight, sharing your experience with the Deferred Sales Trust, and being a part of the Dream Team nearly now. And I'm excited for all the folks that we can help together. And thank you for being on the show. And with that, I encourage you to keep using the gifts you've been given to bless others and help others, especially as it pertains to the discipline of patience, right? And don't forget, and I have a thought here, not trading the joy of the big return with our ego, right? But we want to trade that for the joy of focusing on risk, right? I think that's kind of the real theme that I built from this. And so keep using those gifts to bless others, and thank you so much. And with that, I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to grow your wealth. If we can help you at all, you can go to capitalgainstaxsolutions.com. That's if you're selling a primary home, a business, investment real estate, highly appreciated public stock, you name it. If it has capital gains tax, the Deferred Sales Trust may be the best fit for you. You can go to capitalgainstaxsolutions.com, schedule your one-on-one consultation, and learn more about that. And with that, goodbye, everybody, and thank you so much.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.